guys, I'm glad to have you on board again today. Yesterday has managed to find out its way right up to and making another excess. That was one of the possibilities we forecasted for yesterday's podcast, and basically that's exactly what was happening. So Wall Street still wants more and more and more, and just do everything it can to try going as high as possible. Are we going to succeed reaching out to a new historical high? That is the question everyone is trying to get the answer. My personal answer is eventually. That all depends on what we're going to get today from the NFP. On top of this, as it wasn't just as much complicated as it could be, we had lots of noise, and the fact that, remember, the ADP number had totally missed the consensus, and in which we can see that the momentum over reemployment is significantly slowing down, even though they pushed the price, the previous month number right up to 4 million, which is double what we've had previously. They still shrinked significantly this month's numbers, showing in fact that on the average things are still acceptable, but in terms of momentum, next month is going to be heavily looked forward to. Okay, so the thing is, NFP, we don't know shit about what to expect. Trump has been bullshitting earlier this week saying, I know the number, it's going to be great. So who do we need to follow right now? Who do we need to trust? It feels like we cannot trust anyone right now, not even the Labor Bureau, because even they themselves say the statistics are pretty irrelevant right now. We're getting into standard deviations of what we can actually calculate. There are noise being introduced even from the polling themselves, all of those things. So noise everywhere, which means we don't actually have a goddamn clue about the job market reality. So we expect it to be great, but we don't actually know. So I mean, today is going to be an interesting day. I don't know anything about the number. All I can tell is that we're probably going to shit the consensus for a long time, for quite a big number, because, I mean, that's what happens recently. We don't know shit about the reality. We're just trying to forecast it. We're generally missing the consensus, either better or worse, but we're definitely still navigating into dangerous territory. So let's keep as fast as possible to the charts, because this is where we're going to have interesting things to talk about today. All right, real skipping in terms of context, NFP today, we've already talked about that. Fear and greed index, really important for you to understand that we're getting 74, so 1 inch higher. We're definitely getting into extreme greed territory. It's just one step higher. I mean, 75 is extreme greed. And what's funny is that you see just 1 year ago we were extreme fear over 25. So that just shows you how stupidly schizophrenic these markets are. So we're getting into extreme greed territory, levels that we've seen earlier in 2019 before we actually showed a huge and harsh reversal later on. So is this what's down the corner? I'm still questioning myself over this probability. I think volatility is not going to be sustainable to those levels. But until then, we also have nothing to actually price in to the downside. There's actually no good news, no bad news. There's just no news at all, and every news that could be impacting the market is simply do not. So that's the world we live in. Summer trading, no one cares, and we're playing with this ticking time bomb. Obviously, the one we've talked about yesterday is still totally at play. So Apple is a ticking bomb. Yesterday, 3.5%. What the fuck? I mean, it's just staggering. We'll see. We'll see all about it. So yesterday's session, all about it. The earlier trading activity, when the Europeans are there, everything is fine. Everything is tradable normally. And then, oh, bam, we close European session and we lift off. And the decision has been pure and simple. Who's been lifting the market yesterday? Just the top 5. So still the same old game at play in terms of correlated asset or future asset measurements. You can see Nikkei is breaking down. What the fuck? Eurostock's going down. DAX as well. VIX is pulling up today. Who the fuck is buying those techs? It's just incredible, but that's the world we live in. Just as a purpose in here, yesterday, oh no, it was 2 days ago actually. I'm not sure about the date, but a few weeks ago, Merrill Lynch actually showed quite some concerns about buying Apple and considered saying its own investors, maybe you should stay the fuck away from this, at least not buying. That didn't say sell. Of course, no one says sell on an asset that rises. No one is stupid enough to do this. These guys are analysts, okay? But they say, all right, we're going to remove the buying perspective over these assets and put it to neutral. And just recently, I think it's yesterday, okay, I'm not 100% sure about that, but Bank of America just joined the same thing, okay, they just said the same exact thing. we're going to remove the buying perspective for Apple because we suspect so much stupid prices. Okay, so anyway, that being said, also having a look at bonds, as you can see yesterday, especially on the 30-year bond, has been an upper shadow candle. It has been all around the globe, all around the corner. So I'm definitely looking at the support today. If yields are rising, just like stocks are falling, very bad news. Okay, at least that means the probabilities for systematic risk are increasing, not necessarily skyrocketing. Just like I said, I'm still dealing with an approximate 20% chances for an absolutely ugly financial crisis to show up later after this corona crisis. But so far we're navigating in between. Okay, so we're waiting to see what's next, but we expect still some bankruptcies. Are they going to be manageable, yes or no? Still a very complex question to answer. All right, let's switch immediately to the charts. All right, we're going to have a quick look at correlated assets first, just to highlight what we've just said. All right, pure and simply, once again, you can definitely see the stupid thing. Who's been the leader yesterday? Top 5. They're all the guys that have been lifting the stocks, definitely making staggering gains yesterday. And you can see the rest of the world is definitely not following this pace. You can see losers, leaders, and decorrelation pattern, which means who's right, who's wrong. Are we actually going to recorrelate to the upside, or are these guys really much too much optimistic? And in that perspective, they're going to definitely fall off a fucking cliff, whilst this one will just stay flat. This is my personal perspective. I think that this pattern is totally, absolutely stupid, but I just can't tell for sure. I see definitely two ways of visualizing the future. One in which corporations are definitely going to wreck every government down there because they're so rich, they're so powerful, they're so too big to fail. And the opposite one in which we're just searching for the limit of something before actually totally breaking it. When I say breaking it, I'm saying crashing their prices, shrinking those values, splitting the companies, whatever. I don't know what's next. I just know that this is certainly not going to be one way or another. This is never about extremes. So those people who think that we're going to be shrinking companies and shredding them into pieces, I doubt this is the future. Just like I doubt companies are going to be leading the future just like you see in sci-fi movies. I mean, God fucking damn it. Just think about it. Eventually, corporation era might be 30 years from now, something like that. Definitely not going to happen in 2 years. So just shut the fuck up, man. You're just crazy. Okay, anyway, so that's my perspective. We'll see all about it, but just way too extreme sentiments right now. All right, in terms of pricing, what are we dealing with actually? Pure and simply, we're not going to go down anything below 1 hour chart today because obviously an NFP is down the corner, so it would be totally stupid to trade shorter time frames. But I'll just like to show you these, and you'll let me know what you think about it. All right, my personal reading out of this, okay, bam, bam, breakout, trend, divergence, pullback, final excess. So probably in here, potential reverse. We do have everything we need, the breakouts, the finalizing structures, whatever. The market afterwards react positively, which I think signify that the reverse is still going there, so you can put short-term stop losses out there, okay? But the question is, what does that mean on 15-minute chart time frame? What is this final excess or potential 3-minute reversal? I think it is also a possible 15-minute reversal, okay, trend, divergence, pullback, final excess. So this could be a 15-minute market top in here as well. What about 1 hour? Okay, 1 hour could be the same thing, all right? Accumulation, possibly a very ugly breakout up there. Pretty stupid trending, but we definitely see that the context channel was trending back then. Pullback, therefore final excess in here as well. So we can be a reversal of 3-minute, 15-minute, 1 hour. Let's have a look 4 hour eventually. All right, this looks like a pretty ugly trend reactivation in here. Look at the trend channel. Very little pullback, but though another trending trend channel in here, another pullback, kind of overlapping, and the final fifth wave. Generally, fifth waves cannot be longer than the third wave, as this one is shorter than the first one. So if we're right there, we should be reversing in the nearby area. So end of trend as well in 4 hours. So what the fuck are we doing? All right, that's the question I'm really actually wondering right now. We might be terminating from 3 minute to 4 hours, which means daily, weekly ranging, neutralizing. My daily and weekly range, the one we've talked about for multiple months and weeks, totally overdue right now. Definitely not going to work, okay? Remember what we said. This plan is cancelled because we have a trending wave in here with 3 sets of bullish waves. In that perspective, I am no longer forecasting a triangle. That simply isn't possible anymore. But neutral simply means we're going to consolidate. Who knows what the fucking structure we're going to get. Eventually, flat ranges, that's possible. All I can tell is that those guys forecasting the market top to show up, I doubt they actually are right. I think that yes, we've been trending, but yes, this is over as well. And I think there's no more gains to make in this market. I show you this daily 4-hour taking profit pattern in here. That's just the least we could tell regarding how long this fucking thing has gone on. So yeah, I think it's about time to breathe out. It's just a matter of time, I guess. Probably the NFP today, or if it doesn't, I don't nearly give a shit about this market anymore. I was clear yesterday, we're dealing with very tough resistance. We could eventually make an excess because there is so much there is so low level of volatility, and therefore I suspect some false breakouts. That's exactly what we've had today. False breakout just means if we reverse, I was right. If we don't, I'm wrong. And if I'm wrong, taking a loss, move into something else, stuff like that. I'm still bullish in this market in the background. So my only perspective right now is to figure out whether or not I want to be covered with some bearish trades. Same position sizing. Remember the thing, I'm never ever net bearish being exposed. Not at the moment, and I don't expect it to be anytime soon, at least not until bearish trades are confirmed. When I see confirmation, I won't hesitate reinforcing positions, but at the moment, definitely not. All right. So that's the thing, all right? I think looking at this market right now is totally important because this is the latest area we could have been dealing with as the bears. I think this could be just the excess we forecasted yesterday. We already have pulled back to this area. The big question is right now, are we going to keep grinding our way up? In that perspective, I'm just wrong. And I'm going to cut the latest trades I have. I, of course, sold again yesterday at the evening, right at the candle close, actually. And my perspective right now was this just a trap? And if that's the case, we're going to reintegrate the structure, looking for potential support, building a higher low point, something like that. So definitely some potential support. Let's say something between 3,300 and 3,320. So out of these areas, potential pullbacks could happen. Okay, so if we range out the air, just wreck the bears, we eventually keep grinding up later on. The thing is that if we don't find this support out there, okay, and if this level starts to break, there is no support out there, or at least this one will trigger stop loss, this one as well, this one no support, this one no support. So first available support, 3160. That's hell of a fucking drop, okay? Because all of those supports will simply not work, okay? And I hope you do understand that any false flag in here is an immediate 5% drop. So if you're willing to grind your way up 0.5% a day, just do it, but do it short term. And you really need to understand that the shorter you stay in the market, the better it is for you. So I'm totally okay with trend followers on shorter time frame. Just be aware that this is not possible in 3 minute, 15 minute, 1 hour, 4 hour, because all of those time frames are reaching end of trend territories. That still means you can work out 1 minute and 15 seconds. All right, you're fine. You still have areas in which you can trend follow. But right now, trend following 3 minutes, no possible anymore. Too dangerous because they're showing signs of end of trend and potential reverse. I really need you guys to understand that. I don't tell you what the market is going to be doing. I tell you about the risk management and specifically on the time frames I follow, which means I'm generally taking care of 1 hour and 15 minutes in those prospective and in those areas. We were dealing with a very dense technical area in 1 hour chart. We actually traversed it with so low volatility that, like I said, I think excesses could come out of this area. But now that the excess is done, there's no more room to the upside. It's either that was an excess, end of the story, we'll reverse out there and I'll be able to place definite stop loss and reinforce my position according to my plan and finally get validation. It's always a matter of time. You need to understand. Reversal traders knows that patience is key in trading. Tried my first selling entry in here, stopped at break even. Tried a second one out of these areas, stopped at break even yesterday as well. I'm trying myself a last time in here, and if it doesn't work out, I'll simply let it go and I'll let my bullish trades take the gains. Even though right now my bullish exposition in the market isn't taking the gains because I certainly don't have Apple, certainly don't have Google and Facebook. So all of those assets that have been making gains yesterday are not the ones I have in portfolio, not the one average people have in portfolio, because it is just a glimpse at just a tiny part of the market that is concentrating so much money without rising value. Very dangerous. And like I said, even the big banks are starting to raise questions over these valuations. Anyway, I think we've got more than enough to reach out conclusion. All right, my personal assessment for this market. Technicals are really, really dangerous into those areas. Multiple time frames might be ending and reaching for potential reversal structures. When I say potential reverse, that doesn't mean that these things cannot roll out of control and get into excessive territories. That's exactly what happened yesterday, for example. So these things can still happen, but you really need to understand that if you're betting on excesses, you're betting on chart structures that rarely happen more than 5%. So you're really gambling at that point. It feels to me like people are playing roulette and saying, all right, we've got 15 times, or we've got it 100 times without seeing a zero on the roulette. So I would definitely bet on a zero because it didn't show up for quite some time. That's really absolutely stupid. Or actually, no, that's not the real comparison. That would be like, we had 12 times, I don't know, a red odd number. So yeah, I'm going to bet on a red odd number because definitely going to happen a 16th time. What the fuck? That doesn't mean it's not going to happen, obviously, but after 15 times, you better stop betting on this thing. So way too many excesses recently on the stock market, of course, due to just 5 values. I hope you understood that. This party still keeps on going as we speak, as yesterday, burst of money into Facebook, Apple as well. So the party is still going, but it's going to end someday. And when the day will come, it's not going to be pretty. But in the meantime, we're playing this ticket time bomb. Each and every day is a painful day for whoever is trying to sell the market. Reason why you must never be a short seller, okay? The best you can be is covering your portfolio to 100%, which means all of the potential gains to the upside are lost for you if you take a stop loss with losses. As long as you manage to do just like I do, which means navigating riskier areas with stops at break even one after another, you really need to understand that thing. I personally not losing money at the moment. I'm making money. The market is rising and I'm buying it. It's just that I'm trying to cover the portfolio. So my only goal is to limit, or actually the best case scenario is not to take losses on those cover trades. Of course, the best case scenario would be the market retracing, because I think the only gains right now that a portfolio can make are to consolidative ways, but the market simply doesn't want to consolidate. So the worst possible scenario for you would be for you to lose money for a perspective of a consolidation that doesn't show up. So I hope you do understand this perspective. You don't sell if you haven't bought. If you do this, you're really getting stupid. So covering portfolio, totally yes. Short selling, totally inappropriate at the moment. You really need to wait for experienced traders to tell you that a reverse actually has happened so you can safely put stop losses. The problem is when your market keeps rising, you never know how far it's going to go because it's stupid. And when it's stupid, remember about the poker player game. I can't read unexperienced poker players just like I can't read a market full of bullshitters who don't know shit about risk management. They don't risk manage. They buy because they like the stocks. I don't know shit about these guys and what drives their emotions. They're totally emotionally driven, not risk management. And therefore, they do whatever the fuck they want. I just know that over time they'll lose money and I win. Though I'm just keep on playing with my rules. Time will pass. Stupid trading will end and I'll get to work as usual. It's just business as usual. So right now, covering portfolio, not necessarily making a lot of money, we're living to troubled territories. It's just being patient and waiting for much better opportunities later on. Seems to be the most favorable and accurate decision right now. So that being said, I'm going to wish you guys a pleasant day, pleasant weekend, NFP day. So, I mean, don't be stupid. That's not about time to be ridiculously exposed to the market. So yeah, I've got one single mini trade to the downside. So that's a $15,000 trade, just barely covering the exposition I have to the upside. So I'm not 100% covered right now, just one position. I'll eventually consider a second one, but probably just right after the NFP. And until then, trade safe. And remember what I said, if you have a net bearish exposition at the moment, you're really making it wrong. All right, bye guys.